Is Kusama set to boom? Today we're going to look at the technicals, the setup. We may be in for some serious bullish action when it comes to Kusama. So if you like today's video, like, subscribe, hit the bell notification so you get updated when I post these videos. And if you don't know me right now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been working with currencies and trading currencies for over 15 years, and I was featured in this best-selling book, High Probability Trading Strategies, back in 2008. Now I focus on crypto exclusively. So before we dive into Kusama, so we're going to look at the psychology of the market. Let's just quickly do a recap over here on Elliott Waves. So let me just make this full screen. Right, Elliott Waves. So if you're not familiar, Elliott Waves measures the psychology of the market. This is absolutely fundamental because this is how we're determining the high probability next move. No guarantees here. It's only 50 to 70% of the time that the patterns unfold, but we can kind of predict with high probability what's likely to occur. So Elliott Waves showed, they say that it's human psychology, mass psychology is shown in the price action. 1, 2, 3, 4, 5 on the way up, ABC correction on the way down. So Kusama, I'm going to just go right to the end to you because you may have seen this before. This is typically how a lot of markets unfold. And again, 50 to 60, 70% of the time, this is really, really evident. With Kusama, you would have seen my last video on June 30th that we were showing, if I pull up the laser over here, that we may be at or near a wave 2 low. We've had a big pullback in Kusama and it's panicked a lot of people, right? You may have been panicked. Around $600, I believe, down to below $200. That's a big pullback. But it's really, really common and healthy for healthy markets to do a wave 2 correction, which often is the biggest pullback in a whole big bull market. So if this is the case, we may be set up to see this wave 3 happening. So let's have a quick look. In fact, I've put this circle over here. Actually, it's probably more likely to be around over here, which I'll show you now. So let's just do a quick recap on the last video. Kusama, this was on June 30th, just a quick screenshot, quick update of the last analysis. We said, you know, on that part, if we look at the, again, this, we were talking about this part here, this A, B, C over here. And if we look at this, we're talking about an A, B, C over here. This was June 30th. We hit some Fibonacci price. Fibonacci just shows you can measure psychology, and these patterns are predictable. Not always 100% the case, so you always have to apply proper risk management. So just make sure you know that, right? Proper risk management. But if this is the case, we may be at or near a wave 2 low. So now let's just go into a live chart. So I've taken the liberty to go back in time to that particular date, the same date roughly as this over here. And let's just see what's happened. TradingView, which is the software that I use, has a great feature that allows you to kind of replay the action. So this is what's happened in the last, was it 2 weeks, 2-3 weeks? We've had this move to the upside and then movement to the downside, right? So that's what we've had so far. Now, what is this movement? Is that strong? Is it bullish? Is it impulsive? Is it enough for us to say, hey, the trend is likely to have reversed? Or is it a minor correction where we should anticipate lower lows? Well, let's just take a few things into account. So remember, we're always working with probabilities. There's no guarantees. You have to do proper risk management. You have to take full accountability for the results and your actions. But we can look at what's likely to occur. So on a weekly chart with Kusama, the indicator on a bigger time scale is oversold, saying that the downside should be limited. So we should be at or near a low. And then for the next 3 to 10 weeks, we should expect upside movement. And then we look at the daily chart. Again, I'm using a line chart to have closing day data. It's just a bit cleaner. So if this is the wave 2 low, then we will need to update what the macro picture is. So just a quick, again, just a quick recap. I'll do a fast version of this one. We said we saw a wave 1, 2, 3, 4, 5 of a wave 1. The macro is a wave 1. The 1, 2, 3, 4, 5, A, B, C over 2 is the intermediate. So the C over 2 is an intermediate. So that's what we said here, wave C over wave 2. And then on a micro, we said of this wave C, it seems to have broken down into a 1. It's not very clear, is it? Let me just zoom in. So it's really, really much clearer. We said we've got a wave 1, 2, 3, 4, 5 over C over 2. And that's what this means, micro wave 5 over C over 2. But we've had this move up since. What is this move? So to help us, we're going to dive into a 1 hour chart, and I'm going to tell you my thinking based on what I know. No guarantees, but we'll do our thinking and then we'll update the macro, intermediate and micro, so what we can anticipate going forward. Because on a daily chart, this is not that clear to see if there is any particular pattern, but we're going to see on a micro scale, is there a 1, 2, 3, 4, 5 ABC style pattern? If there is, that gives us high indication of what's likely to occur next. So let's jump into a 1 hour chart. Right, so this movement here, this here, just so we're on the same page, is the same as this movement here, right? I'm going to make sure that's clear to you. So I'm going to draw this line that goes like this. That movement here is also down here on the same chart, is the same movement on the 1 hour chart, is that same movement here, yeah? Sometimes when you're moving from different time frames, I know it can be a bit confusing because there's more data on the lower time frames, but it's the same data, it's just got a bit more information. So what we're going to really pay attention to now is, if I just zoom in this part here, let me do it like this. Just want to get this as clear as I can for you. We're going to look at it here. So you can see what I've drawn already. What we're going to focus on is all of this part here. This is really important, right? This is what we're going to focus on. There's a couple of things. What seems to be relatively clear is we have got an impulsive trend on a lower time scale. Is a 1, 2, 3, what looks like a 4, 5. Because the waves are not overlapping, right? So that's an indication that we may have seen a reversal in the trend. And then we have got a corrective move happening over here, which is this A, B, C. But this looks a bit corrective, so we're probably going to get a complex correction, D and an E. So we're just anticipating we may see the final low being made over here, which will be a wave 1, a wave 2 of a new macro degree. So hopefully that's making sense. I might be talking jargon, so I might need to make sure. The main thing that I want you to take away from this part, which is not clear. Most people are unaware of something called an overbalance of time and price. Time and price. What the heck does that mean, Jagir? Well, if we look at the moves to the upside, so during this whole move down, right? How big have the upside movements been, right? So we look at this movement here, the movement has been that big, right? Keep it all in layman's terms. The movement here has been that big. The movement here has been that big, right? So the biggest price, if we now just move these to the side and go out of these three, the biggest one is this one on the left, right? So that's the one that we're going to keep. And then we want to look at how long have those movements to the upside taken. So this started here and it took this amount of time. And we'll now move this here. This is important for you to understand, because this is going to give us some really valuable information. Really valuable information. Most people they don't know about what I'm about to show you. This one you can just tell it's shorter, and then this one over here is roughly, well, obviously shorter as well, right? So the longest it's taken is this much time, and the price movement on the upside is this one here. Yeah, hopefully that's making sense. That's the measure that we have. An overbalance means we're going to exceed the price and exceed the time taken. If that occurs, W.D. Gann, who's one of the forefathers of technical analysis, said then trend change is inevitable when you get an overbalance of time and price. So that is what I am seeing over here. So how much price movement has there been? Well, the low was around here, roughly here to here. And how long did it take to get there? Well, it started around here, so let's just take it from here. And it took this much time. So obviously we can now see this is the new comparison in time. Well, it's obviously much greater. You can see it's much greater. And then this is the new comparison when it comes to price. You can obviously see it's much greater. To the untrained eye, that's not clear. That's not clear at all. However, now that you've got me looking at it, we go, right, we've got an overbalance of both time and price, right? We've got a bigger movement that we've had since June 21st. So in the last month, this is the biggest upside movement that we've had. And the time it's taken was also longer. This is the first indication that the bulls are now possibly taking over the bears. The buying strength is coming back into the market over the selling strength, and it's the biggest change that we've seen, and we want to pay attention. Then we've got an impulsive wave structure, a 1, 2, 3, 4, 5, meaning that this, if I just zoom in over here, this is important that I really make this clear to you, because it's really valuable information. If we look at the high of this and the low of this, it's not overlapping. It's not overlapping. So that means it's an impulsive structure, and it looks like a nice 1, 2, 3, 4, 5. I mean, you could count this as the 4 or this as the 4. That's not overly important, but it looks like a 1, 2, 3, 4, 5, and then a corrective structure, which is overlapping. This overlaps into this zone, right? That's important to note. That's why we're saying it's a potential. This is highly probable that this is the low, and that we're seeing the initial impulsive wave with a deep correction. A deep correction happens often for a wave 2 because the market, the mass psychology, hasn't understood that the tables have turned. The power has shifted. It's not been registered. So people are still thinking it's a bear market. It's a bear market with Kusama. However, this is the first indication. Again, no guarantees. It's not like go all in. You have to do proper risk management. Or if you just got your portfolio and you're doing crowd loans with Kusama tokens for Moon River or some of the other projects, this just gives you valuable insights. I'm making it clear there's no guarantees, because sometimes people hear me doing a video and then, I don't know, buy like 50% of their portfolio on something, and I go, look, you shouldn't be buying 50% of your portfolio on something unless that's specifically part of your strategies. It's a bit aggressive. But the main thing here is overbalance in time and price. Hopefully that's clear. You know, put it in the comments below for me, overbalance of time and price, if I made that clear. If you kind of just, even if it's just a thumbs up, time, overbalance, clear, you know, hopefully that's clear. So what does this mean for us? Well, if this holds, I've done some Fibonacci price retracements as well. It's here a price zone. Here's the time cluster. I won't go into too much detail of how I got these numbers, but potentially we may see a low made in this zone over here. If this holds, we then should see, I'm just going to delete this here, a potential wave 3 being made, right? A wave 3. However, here's the caveat. Here's the caveat. It's really, really important, because in the game of trading, it's not about being right or wrong. The best traders on the planet don't care if they're right or wrong, believe it or not. They just look at high probability setups. They execute on the trade, and then they know they've got no more work to be done other than managing your trade. So look, here's the caveat. Here's the caveat. This is important. Let me make sure this is clear. This is important because people don't get this, right? Okay. What we need to ask ourselves, right? If you're trading Kusama, or even just preparing your emotions for the ups and the downs of Kusama, is what is the minimum likely outcome if we're wrong? If this is not a wave 2 low and we're not going to see an all-time new high of wave 3, what is the minimum that we should expect to happen, and to apply proper risk management? This is next level, but I think you're ready for it. We're going to put in this is a 1 or an A. Did you hear what? A 1 or an A. So we've got this initial move up. A wave 1 and a wave A look very similar. So at this stage, we don't actually know. I'm favoring more that it's a 1 because of the larger degree time frame, but we want to be cautious, especially if you're trading Kusama. And then this down here is going to be a 2 or a B, because a wave 2 and a wave B also look very similar, And then this next movement is where we'll kind of get confirmation. Is it more likely to be an A or a 1 or a B or a 2? This next movement. So the next movement that we're looking for, you probably guessed it. If you haven't, it's going to be a wave 3 or a wave C. And this will tell us, right, the probable outcomes. So what do we need to know? What do we need to address? Okay, we need to address a couple of things, a couple of elephants in the room, right? We need to make sure we go, right, when we see an impulsive wave structure, 1, 2, 3, 4, 5, the minimum that we expect is a correction to that impulsive wave structure. What's the correction that we anticipate? if it doesn't end up being the beginning of the next part of the bull market for Kusama, well, the minimum that we should anticipate, I'm just trying to get this high over here. Something in the lower time frame, it's a bit, oh, good. Boom, there we go. The minimum is here. I'm gonna draw it. I'm just gonna draw it like this, step back. All right, so what we're looking for is a 50% as a minimum. Let's just draw it, just that one number, right? We should anticipate a minimum of 50%. Also, what we should anticipate as a minimum for a wave C, and the most common wave C, is 100% of a wave A. So if this does end up being a wave A, what we can do is we can just literally measure. I'm just gonna move this up a little bit. I'm gonna zoom in a bit. But we can measure this wave down here to up here and project it forward. Now the wave 2 hasn't been confirmed, or the B, but we're anticipating to be in this region. So then we can do the following. 100%, bang. I'm also going to add here 38.2 because it looks like it's really, really far from that market, right? So if the market gets to this point and reverses, it's more likely to be a wave C, because a wave C is most common, is going to be 100% of wave A. However, a wave 3 most common is actually a 1.618 to 2.618. So this is where, hopefully I'm making this part clear. So the logic is the following. Make sure that's in. When you're managing your trade position, if you're trading it, if you're investing in it, whatever you're doing or however you're measuring it, is the minimum expectations is this part here, right? That's the minimum that we should anticipate, right? That's the high probability outcome. Why? Because the daily momentum is bullish. Look at this, like it's turning bullish. The blue line is almost crossing the red line, and we should anticipate that in the next day or so. So over the next week, we should anticipate at least, not guaranteed, but the probability of this price action being hit, which is $260 for Kusama. Now, when you're applying proper risk management, you should be taking some profits at that point, right? Or you should be adjusting your stop losses, or however you're managing your positions, knowing that this is the minimum. Now, at this stage, we're not going to know if it's going to be a wave C. If it's a wave C, then we'll end up seeing lower lows. But if it's a wave 3 and we're hitting these points, if we hit this point, it's more probable that it's a wave 3. If we exceed this point and hit this point over here, up here, at 2.618, at $400, then that's going to show us that the trend has reversed and a wave 3 has identified itself. But what we're aiming to do at this moment in time is not look back in hindsight, we're looking with foresight. Because if you're buying for the first time, you know, it's not great when the moves happened already and then you're trying to catch up. That's bad practice. What you're trying to do is anticipate what's going to happen next so you get the best possible price. So today's price of Kusama is what, $177, right? So we want to see if we can buy that. And if it does go to $260, which is what, $100, what's that? That's a 50, 60, 70% increase to go, right, can I take some profits at that point? And then if it starts to unfold on the bigger degree, then we got some movement happening. Hopefully this is making sense. This is the part that I really want to help you with, because most people don't get this, because they see a technical analyst like myself and they're thinking that, you know, it's either a right or wrong game. It's not a right or wrong game, it's a probability game. Meaning that now there's a high probability that we're going to see a reversal. The minimum expectation is this. But we want to ride the wave. The big money's made in the big moves. The big money's made in the big moves. What's the big moves? Well, let's just go back onto a daily chart and let's just finish up with updating the macro picture. So what's the big money? Well, look at this big move. If you was able to buy down here, down in this zone, and ride this wave, that's big money, right? That's big money. And now, if you're able to buy in this zone and manage your position now that you got a clearer picture, and not just have it in for this little tiny move, looking at it like a day-to-day, it's gone to 100, you know, some people focus on $170 and it's $200, $210. You want to be riding it from this kind of price action, picking some really solid projects and riding it to, you know, the next big level high. So the next big level high is going to be anticipated, and we're going to update this notes in a second. It's going to be, let me just draw this out for you. I think I drew it already. Here we go. I've got it here. Yeah, did it? Yeah, it's right. It's roughly the same. So we're talking about a $1,000 Kusama, right? $1,000 Kusama. However, here's the smart money. Remember, I read a quote to you a few days ago. Warren Buffett says rule number 1 is never lose money. How do you do that? You have to assume you're wrong. The best traders on the planet assume they're wrong. Even when they're holding for 2 weeks, 3 months, 6 months, 12 months, so on and so forth, assume you're wrong. So this is what we're doing here. We're going, if we're wrong, what's the minimum that should happen before proven wrong? The minimum that we should anticipate is a move to the upside, Kusama hitting $260. If we're wrong and it continues the bear trend and it goes on to make new lows, because we're identifying in advance this is the minimum, you should be looking to take some type of profit here where even when you're wrong, you'll make money. That's the secret. That's the secret. Most people are so focused on making money, even when it moves up this much, it might be 20% up, 50% up, 70% up, even maybe 300% up, depending on where you got in and how you're executing your trade. You know, there's multiple ways. But then they're just holding. And if you're just holding and you haven't taken profits and you're not exercising that muscle to take profits, then you're going to find it difficult to take profits, you know, because you just don't know. Here, you go, right, this is the minimum, let's take 20% off the table, or let's take my original investment off the table, or let's just take X amount off the table, so even if it is wrong, we minimize the downside. And if we're right, then, going back to a daily chart, we're looking to ride this wave. We're looking to ride this wave. There'll be ups and downs, but we're looking to ride the macro wave. Yeah. So let's do 2 things to finish up. Oh, hopefully, like, this is making sense to you, because most people don't get this. Like, most people have amateur level thinking, and they're too focused on the near short term, and they're not seeing the bigger picture of the blockchain space, the crypto space, and how to really analyze the market. And then they're looking to blame people and everything else. Whereas if you take responsibility and go, okay, risk management, I need to learn. What does that mean? How do I apply that? How can I do it in a really comprehensive, objective manner? And then all of a sudden, you're just playing a different ballgame. So what we're looking at now is the macro being a wave 3. So we're at the potential beginning of a wave 3, but with a question mark, because we've had the initial overbalance in time and price, but it's not enough for us to kind of give it a full thumbs up. It's to go, it's the initial big indication, which means we can, because most people say you can't buy at the bottom and sell at the top. Well, with Elliott wave theory and Fibonacci theory, with time analysis and momentum strategies, you can, with high probability, but also protect yourself from the downside for when you are wrong. And hey, the best traders on the planet are wrong 50 to 60% of the time. But when they're right, they make loads of money. When they're wrong, they either make a small profit, break even, or take a small loss. That's the name of the game. All right, so we've got wave 3. Intermediate. Right, we're on the initial wave 1 of the wave 3, right? The initial wave 1 of a wave 3. So we're going to just update that over here. And then on the micro, we're on the wave 1. Oh, sorry, no, we're on the wave 2 of the initial wave. Oh, no, I apologize. No, it's wave 1 of wave 3. So wave 1 of wave 1 of wave 3. That's what I'm looking for. There you go. I know it's a bit of a mouthful. Right, so we're going, macro picture is wave 3. Let me just make sure that's clear. Let me make sure that's clear. So macro picture is, we're saying this new wave 3. That's the macro. Got a question mark there because we still want more confirmation. So it'd be like this. The intermediate, because this wave structure will tend to typically break down into a 1, 2, 3, 4, 5 over 3. We're saying the intermediate is this wave 1, but then this wave 1 itself, we've got this initial wave 1, 2, 3, 4. I know it's a bit here, but yeah, wave 1 of would normally break down to 5 waves. So we're saying we're on a wave 1 of a wave 1 of a wave 3. That's what this means. Wave 1 of a wave 1 of a wave 3. So we've got 3 degrees of time, Elliott wave counts, right? And that's what we're looking at here. If it holds, this is really good news, but I can't emphasize enough. Doesn't mean it's guaranteed. It's not. We just can go with the information right now. So that logically, we're looking for a confluence of events. We're going weekly momentum, right? This blue and red line down here. Right, if I double click on it, double click on it, because it's oversold, deeply oversold, so the momentum on the downside should be limited. We've got the daily chart. We've got momentum, also deeply oversold. We've got price, a wave one over wave one over wave three, right? That what we saw on the hourly chart, that's what we're talking about here. This high probability wave two, but this overbalance in time and price that we saw over here. So now we've got two confluence of events. Now we've got price clusters on this time degree, on this chart over here, but we've also got Fibonacci price clusters down over here as well. So you've got three things. And then we've got some time analysis. Back on the hourly chart, I didn't cover you how I got to this, but there's some time analysis saying we should be at or near this particular low. So there's four things that are indicating to us. But even when it looks this good, we still want to assume that we're wrong, right? That is so important, because most people overexpose themselves. And when it doesn't go right, they lose 50% of the whole account or 70% of the whole account. And that's hard to come back by. The typical, if you're trading, you know, is risking 3, 4, 5%. 3% is actually the typical if you've got a decent size account. And if you've got a big size account, then people are risking like 1 to 2%. So here is the first profit taking thing to assume if you're wrong, if you're trading this, but this just gives you a higher viewpoint. Last but not least, let's just do one last thing, because I find it really, really useful, is do you get how long does a typical wave 3 take? Typical wave 3, how long it takes to unfold, the minimum is typically the length of time it took to form the wave 1. So we can simply take this wave 1 and project it forward from this point here. And if I just get this up, and we're looking for this number here, boom. You can see it's off the screen, off the chart, literally. And we should say, yeah, so, I mean, it took quite long to form this. This part here was quite long. I would actually argue it would be better for us to, even though the wave 1 starts here, the real bullish movement already started from like this point here. So I would say minimum time frame would be by November this year. Kusama to be over $1,000. There you have it. There you have it. Now, if you like today's video, like, subscribe, hit the bell notification. That was a detailed one. That was really, really detailed. It's almost like a mini masterclass in itself. If you like that, if you want more of that, if you want me to teach you more on like the overbalance of time and price, the real detailed nuances on how to do certain things that allow you to have a higher probability, or even just understand what's likely to occur next, you let me know and I'll deliver for you. Like, subscribe, bell notification. We're close to 1,000 subscribers and I appreciate you being here with me. So let's finish off on a quote. We're still with the book, The Winning Investment Habits of Warren Buffett and George Soros. George Soros has been one of the world's best technical traders. I'm not even sure if he's still alive. I need to double check. So here we go. If you don't know when to say yes, always say no. So Warren Buffett said, if you don't understand it, don't do it. And Larry Hite said, we know that we don't know. So in other words, they know when they don't know the product or the psychology of the market or the technicals, or they don't understand blockchain or crypto, then they just don't get involved. So get to know, you know, understand blockchain, understand the macro picture, understand what's happening, understand that blockchain is now allowing trust to be decreased, the cost of trust by 10,000 times, which is changing the world that we live in, and it's happening. It's like the new revolution of the internet. And if you don't understand those basics, the confidence of holding something just goes low, and you're just doing speculation for a quick bet, hoping that you're going to get rich overnight. Whereas if you get to understand the space, the technology, the fundamentals, the teams, the companies, the real innovation that's occurring, and understanding psychology of Elliott Wave, Fibonacci, and so on and so forth, you can just operate on a higher level. So then rather than playing Sunday League football, you enter into the Premiership, your international football, and there you have it. So I will see you soon. Kusama, looking healthy. I'm going to keep a close eye on this, because it's quite cool seeing the overbalance of time and price, but it'd be good to see how it unfolds. But again, remember, there's no guarantees, so always assume you're wrong. Proper risk management, protect the downside, and if you do that, the upsides and the profits will take care of themselves. See you soon.